Okay, so today we'll look at that manufacturing account as promised. So I'm just looking at Ryan Limited as the one I'll do the video on. It's the most latest one of my papers. Obviously, there was one asked in 2018 as well, but look, the process is the same as a question one. Draw out your skeleton. Now, your skeleton for a manufacturing account will have your manufacturing element, opening stock plus purchases raw materials. You might also put in carriage in there, because in some of the questions there's carriage in on raw materials, so we'll just stick that in there. Then you have your few extra costs, your factory costs, your two work in progresses, and then your less. Now I have sale of scrap material and profit and sale of machinery. There's no guarantee you'll have either of those in any question, but we'll just put them in. Your trading profit loss count then is the same, a little bit shorter. We're just looking at finished goods there, but apart from that it's the same. You just have to remember that there is taxation involved. And then your balance sheet is the same. Okay, your general balance sheet. So I'll work primarily on the workings, and then we'll just slot them in at the end. So your workings start off with your closing stock working. Stock in hand are finished goods, raw materials, work in progress. And it doesn't say anything about them, so there's no change as yet. No doubt there will be going forward. So it says then, number 2, included in the figure for sale of scrap material is 3,600 received from the sale of an old machine on the 30th of the 6th. This machine, it costs 18,000 on the 1st of the 4th. Now what I'm going to do with that is I'm going to tie that in with the depreciation on machinery working. So somewhere in this question there'll be mention of depreciation on machinery. It's just directly below it. Provide for depreciation on plant and machinery at the rate of 10% of cost from date of purchase to date of sale. So that's going to be my basis for that working. So we're going to do it the exact same way as we do the depreciation of vehicles in company accounts. We're going to start off with plant and machinery. Take your starting figure from the question. So always the cost figure, so 320 minus the old plus the new. So take the one you sold at its cost price, so it cost 18,000. You hadn't traded it in against anything new, so you're not adding on anything. So if there was a trade-in involved, you would add on. So your plant and machinery is 320 minus 18,000, which is 302,000. And we're going to use those two figures to depreciate plant and machinery. So we'll start off, the rate of depreciation is 10%. So it's going to be 10% of 320 by a number of months, and then 10% to 302 by a number of months. So the months involved are, it was traded in on the 30th of the 6th, so 6 and 6. So both of them are by 6/12. So 10% of 320 by 6/12 and 10% of 302 by 6/12. So we add them together, and that's your depreciation for the year. So that'll be 31,100. Just as always then, after depreciation you've accumulated depreciation. So your accumulated depreciation starting off is the difference between the 320 and the 245. So that is 75,000. It is 75,000. We're going to add on the 31,100, and then we're going to take away the depreciation on the one we sold. So the one we sold is 18,000. And we bought it on the 1st of the 4th 2010, so we had it for 9 months in 2010, all of 11, 12, 13 and 14, so 14 by 4 is 48, and then add on your 9 months is 57, and then you had it for 6 months in 2015, so it's 63 twelfths. So that's 18,900 to get taken away. So our final answer for that then is 75,000 plus the depreciation this year minus 18,900, which is 87,200. Okay, so then as always, anytime you sell an asset, you have a profit or loss on the sale of that asset. So the value is what it cost, 18,000, minus its depreciation. That 18,900 has to be wrong, sorry. Sorry. Just change that. So its value then is 18,000 minus 9450, which is 8550. You received 3,600. So that's 4,950 of a loss. Then going back up to the check for the net amount, or the where you received, you got 3,600 for the sale of the scrap. So the sale of scrap is 6,100, and we're going to have to take out that 3,600 because it shouldn't have gone in there in the first place. So that's 2,500, which is what it should have been. Okay, so that's that working finished. That's basically the big long working in this one. Number 4 then. So it was discovered that finished goods had been sent to a customer on the 31st of the 12th on a sale or return basis. These goods have been entered in the books as a credit sale of 15,000, which is cost plus 20%, right? So if you sell goods on a sale or return basis, you should not include them in sales, and that's around this idea of the accruals concept, which says you should only book profits of sales when they occur. You always take the safe sort of option. So sales and debtors should go down because the sale has not taken place. So sales is 1352 and debtors starts off as 52,000, and we're going to take away the sales from that. So we sold 15,000 to them, so we're going to take 15,000 away from both. Okay, the other thing that has to change is stock of finished goods, the closing stock. So the stock of finished goods is 77,600. Now that has to go back up by the amount of the stock, because the stock has left our warehouse but we still own it. So when we went to count it, we weren't in a position to count it up, but we still own that stock, so we have to add it on. The stock is valued at cost rather than selling price, so we have to add back on the cost price, which is 15,000 divided by 120 multiplied by 100, because it was marked up by 20%. So it's probably 12,000, I'd say. 12,500. So we're going to add that back on. Okay, it's unlikely that that'll change again, so I'll just work out my total there. So that's that done. Suspense working is the normal suspense working. So the suspense arises as a result of a discount entered only in the debtor's account. So discount, double, everything goes in double entry. So if it goes in debtors, it has to go in some other account. So it's not debtors we're changing, it's discount we're going to change. So we receive discounts from debtors. Do we? No. Sorry, we give discounts to debtors. Debtors are people who owe us money. So debtors needs to go down by the amount of the discount. So where are debtors? Oh, we already have debtors. It had gone in the debtors account, sorry, so it's already included in this. It's not included in discount. So discount starts off as 6,000 as a credit, okay? Now we're going to debit the discount away from that. We're going to take the discount away, so it was 1,200. Because debtors went down by 1,200, so it would credit debtors, debit discount. So if discount is a credit, you're taking it away. So that means that whatever incorporates expense, where are you? What incorporate general factory overheads? They need to. This side has gone down by 1,200, so this side also has to go down by 1,200. So 86.4 needs to go down by 12. The second part is 5,000 credit purchase of raw materials entered on the incorrect side of creditors account. If we buy raw materials, creditors go up by 5,000. What they're saying is they've put it on the debit side of creditors. So they've put 49,400. It should be, to get it back to zero, you have to add the 5,000 back on. And then you have to add another 5,000 back on, which gets it back onto the right side. So they put it on the left when it should have been on the right. So if you put 5,000 on the left when 5,000 should be on the right, to change it, you obviously have to add 10,000 back on. Okay? So this side here, 10,000. This side is now 10,000 greater. So this side has to go up by 10,000. So I'm going to add 10,000 on there. Okay, that's the suspense one working. One done. Next one then. The figure for bank and the trial balance has been taken from the firm's own accounts. That's our normal bank working. So bank starts off at minus 42.6. The bank statement arrived showing minus 36,000. And then these mistakes are going to fix it first. So it says a check received from a debtor had been dishonoured. This had not been entered in the books. So what's happened? We received the check, so we put the money into our bank, and the check's been written off. So we have 800 less, or it's been dishonoured, sorry. We've 800 less in the bank than we thought. And debtors then has to go back up by 800. Now, it doesn't say he's not going to pay us, it's just saying that the check has bounced. So the debtor has to pay us back the money. So debtors go up by 800. Second one, 5,100 for 6 months rent, ending 30th of the 4th, was paid directly into the firm's account. So again, we didn't know about it. So we've received 5,100. And it's paid directly into our account. So it's for 6 months. Up to the 30th of the 4th, 2016. So it's really only for 2 months this year. So rent starts off at 8,500. We're going to have to add on 2/6 of 2/6 of this number here, 5,100. because that's for this year. So that should be 1,700. Okay, and the remaining 3,400 is rent receivable prepaid. So the 4,600. And that'll be 3,700. So that's going to be a liability, money we owe back on. So your rent is 85 plus 1,700. Okay. Check for 2,000 and not been presented for payment. So we've it paid 2,000. So this should all hopefully work out. It's 38.3. Sorry, that was 36.3. Yeah, and it does minus 38.3. So that last one is just to check that the thing works. So both numbers are the same. So we've done it correctly. That rent one would have been tricky enough if you hadn't seen it before, but just work out like that. The rent for this year has to get added in, and anything that's for next year is prepaid. Alright, working 7. During 2015, Ryan built an extension to the warehouse. This work was carried out by the company's own employees. The cost of the labour, 12,000, is included in factory wages. So the materials costing 28,000 were taken from stocks. No entry was made in respect to this extension. So the labour includes this 12,000, and it shouldn't. Okay, so we take it out. So direct factory wages are 220. I'm going to take out 12,000, and then the purchases of raw materials, which I'm not sure if we changed already. Nope. So purchases of raw materials starts off at 524,200, and we're going to take out the the materials out of that 28,000. Now both of them get added to buildings, so at cost. So they're not business expenses; they're the purchase of an asset, basically. So you've got an asset costing 40,000, made up of labour 12 and materials 28. Okay. Now, next thing, and this will be new. Provide for a wage increase of 5%, which has been backdated for the 6 months, 1st to the 7th. Provide for means it hasn't been paid yet, so it's going to be due. Okay, so wages anyway is at the moment 208,000. We're going to provide for a pay rise there of 5% for 6 months. So I'll just do it here as wages due. So we're going to find 5% of the 208,000 by 6/12. Which is 5,200. And that's wages due at the end of the year. So you have to add it on to your wages. So your wage at the end of the year is 213,200. Your wages due, that's a current liability. Excuse me. Provision should be made for the following: investment income due and debenture interest due. So we need to work out our investment income. So we've got 4% investments. So it's 4% of 315. Now you got them on the 1st to the 5th, so you don't have them for a full year. So you have them for 8 months, so it's by 8 12s. So that's 8,400. And then investment income due is 8,400 minus whatever we've received. So we haven't received anything, so it's minus 0. So that's 8,400. Debenture interest due. So 8% debentures. So you can see here that you got an increase of 60,000 on the 30th of the 4th. So for the first 4 months you only had 315. And for the remaining 8 months you had 375. So just add those two together. That's 28,400. Okay, so that's all our working's done now. Just quite conscious of the fact that I rushed that fairly quickly because of a class coming up soon enough. But we're going to slot all those numbers in to our answer. Now I'm going to do it starting from the top. Say starting from the top of the manufacturing account, I'm working our way over. I'm just going to make this a little bit smaller, if that's okay. Just so as you can see. So, as I said, we'll start at the top, opening stock of raw materials. Now that's going to come straight from our question. So, our opening stock of raw materials is, what is it, opening stock? 46,500. Purchases of raw materials gets added to that. So that should be, let's see here now, 524,200 minus 28,000. So 496,200. We're looking then to see if there's any carriage, which will be above closing stock, obviously. And the reason I'm saying that is in some of the questions there is carriage in. There's none in this question. So if we take away the closing stock of raw material then from that, and there was a working on that, so we know it's on our workings page somewhere. There's always working on that. So stock of finished goods is, of raw materials. There's no working on that. It's a finished goods. So for raw materials, 36,100. So just like any question, it's opening stock plus purchases plus carriage in minus closing stock, and that gives us our answer of 506,200. Okay, then you're on to your prime costs. So you've got your manufacturing wages, or your direct factory wages, as it's called in this question. Now, direct factory wages is where are you? $213,200. You've got to add on your hire of special equipment. Now that always comes straight from the question. 35.7. There's never really any working involved there. Now there is one in this that is a prime cost which I hadn't included, so I better include it here. Sorry, which is your royalty payment. So always check out for that. Now, I think this is probably the first year there was royalty payments, so I would think a load of people put it in, not knowing what royalty payments are, maybe put it in the trading profit and loss account or into the factory overheads or somewhere. But it's actually a prime cost or direct cost. So that 30,500 goes in there. So we add those all together. And that'll give us our prime cost of 781,600. Alright, your factory overheads then. So general factory overheads. So the factory overheads are anything to do with the factory. So general factory overheads are, oh wait, this is so big here, sorry. General factory overheads we definitely had working on. So they're 90 something. 95.2. Then we have our depreciations. So depreciation on machinery is, I think it's 30 something. Depreciation on machinery, 31.1. And if you've made a loss on the sale of your machine, that will go in here. If it's a profit, it will go in down at the bottom, as we'll see later. So the loss on the sale of the machine was 4,950. There was no other general factory overheads. If there was depreciation of factory buildings, they would go in there, and if there was patents written off, they would also go in there. So we add those on. And we get 917,250. Then your work in progresses. There'll be no changes to these. So your opening stock of work in progress 33.2, which you add on. And your closing stock of work in progress is 34.2. So that's 916,350. So sale of scrap material. So then your bottom parts, any profits that you make from your factory get taken away here, because you're trying to find the cost of making your stuff. So profits obviously reduce your cost. So your sale of scrap material, I think there was 2,500. That gets taken away, and we know there was no profit on the sale of machinery. There was a loss on the sale of machinery, so there's nothing to take away there. If there was a profit, you would take it away. So that gives you your cost of manufacture of 913,850. Okay, so that is basically your manufacturing account is basically a big working to do with the cost of running your factory. So your factory overheads, any general factory things, any depreciations on building, any depreciation on machinery, any general factory overheads, any patent stuff will go in there. Okay, that leaves us then onto your trading profit and loss account and balance sheet. Now again, I'm going to start from sales and work my way down. I wouldn't necessarily do that. I possibly would just throw the numbers in as they come, but it's up to you. Anyway, sales was working, so that's 1,337. So we'll throw that in. Your opening stock from over here. So this is all the finished goods now when we're looking at this. So 48,100. You don't put in your purchases, so we're going to put in our answer from here, 913,850. And then we're going to take away our closing stock of 90,100. So our stock of finished goods changed in our workings to 90,100. Alright, so usual job, opening stock. Sorry, when I inserted the line there, I put it everywhere. So, bear with me here. I'll skip a line. So then it's usual job there, opening stock plus purchases minus closing stock, and we're going to take that away from your sales. So that's 465,000. 150. Sorry, I'm at 3750, isn't it? Okay, so your expenses, so your admin, you're only really going to have administration in these ones, but maybe if there was rent or something like that, rent is an expense rather than rent as another operating income, it will go in there. But any questions so far, there's only really ever been admin, so there was no change to administration from what I remember. So 49.2, we can put that in. Now you're selling and distribution, you'll obviously have a few. So any bad debt stuff would go in selling and distribution. Any selling expenses, any commission paid, anything like that. So we have any selling expenses. Yeah, so the selling expenses 36.3. Now I know there's nothing from the workings, and that is 36.3. And I don't think there's a bad debt. Sorry. There was bad debt provision, so it says the creation of a provision of bad debts equaling 4% of debtors. So I hadn't done that, so apologies there. So just do that. So bad debt provision. So it's 4% of debtors. Debtors was changed, I think. So it's 4% of 37.8. Which is 152, which will also be our increase because there's no bad debt provision there. It's the creation of a bad debt provision, so the increase in itself just goes in. So that's 1512. There's no commission, so the royalty payments has already gone in. Discount is a credit, so it's another operating income. If discount was a debit, it would be a selling expense. So there's no other ones. So we can put those two together. I'm just going to add them all up. Obviously, you should really total them, but anyway, that'll do. 87,012 then is our total expenses, which we'll take away. And you get 378. 378238 doesn't look right, but we'll see what happens at the end. Alright, your other operating incomes then, which I've left absolutely no space for, but we know there is other operating incomes in this, so I better put in a few lines, which again could cause a little bit of confusion in your exam, but sure, you'll survive. I said it is a normal trading profit loss account, so there are other operating incomes that we have to add. So we know, because I just said it, there's rent. So from what I remember, rent changed. So rent is 10 something, I think. Rent. Yeah, 10.2. And there was also this discount, which I know changed with the suspense working as well. It was 4.8 maybe, or 4 something. Where are you? Yeah, 4.8. And they both need to get added on. That's your operating profit. Oh. So I've left out something there, discount. When I changed it was 4.8 and okay, so that's God, I don't know what I'm after doing there. Anyway, take away your debenture interest, which we worked out the last one of the last workings we did. It's just debenture interest, not debenture interest due. 28,400. We're going to take that away. That's your profit after tax. Then taxation should be in the question here somewhere. Normally it'll tell you to provide for it, but there was no mention of it. But there will be tax on the credit side here of let me see. Okay, there's no tax, so we'll just put that there. Three. There's none, but I have left out, of course, bloody investment income as well. So I'll just put in the taxes 0. Let me just insert. Sorry, my skeleton was a bit incomplete. So we're putting in our investment income, which we have to add on, which again we worked out in the workings. So that's 8,400. So obviously take away your interest, add on your tax. So just correct that. Or sorry, add on your investment income. There's no tax, so it's 373,238. There's dividends. I don't think there. Again, I'm not sure if there is any dividends, but we'll see. There is dividends paid 22.5. That's 357.38. And then there's profit and loss balance of 68,900. It's on the credit side, so you'll add it on. If it's on the debit side, you would take it away. So your profit and loss balance gets added on, and that's 419,638. Again, we'll only find out at the end if it's right. I'm a little bit dubious as to whether I got this right, given all the things I left out in the middle here. Anyway, onto your balance sheet. Normal balance sheet should be quick enough. So there's no patents in this question. Normally there is. So you're onto your plant and machinery. Starts off at 970,300. There was accumulated depreciation of at the start it was 20,000. There was nothing new, so it's still 20,000. So that's 950,300. Sorry, that was buildings, wasn't it? So then you've got your plant and machinery, which starts off at 302. Take away your accumulated depreciation, again for find your working here. Your accumulated depreciation should be, that's not 11.6, what the hell. So 96,650. So we'll take that away. 205,350. There's no other fixed assets, so that's us done. Okay. So onto our current assets. Your three closing stocks need to go in. So your closing stocks of raw materials are 36.1. Of work in progress is 34.2. And your finished goods was changed, so it's 90,000 something, I think. 90,100. Any other fixed assets? Well, you have your usual ones, debtors and less BDP. So debtors we know was 37.8, I think. And the BDP was 1512. And that's 36,288. And then what other ones will we normally have? Investment income due. That's from our workings. And our investment income due was 8 something, 8.4 maybe. Same as our investment income, so 8,400. And make sure you get all of these in. The problem with starting from top to bottom is it's very easy to leave something out. I'm hoping I've everything in there. Your current liabilities. Well, we definitely have our creditors, so they're the ones we always have. Creditors, bank, we know we'll have that. We know we've rent prepaid. So it's rent receivable prepaid and wages due. They're the ones I know off the top of my head, so we'll get those numbers in. So creditors, there was a working involved on creditors. So it's 59.4. We had our bank working, which is 38.3. Rent received prepaid was 3,400, not 3,700. My God, my sums are brutal. 3,400. And wages due, again that's from our workings, was 5,200. Then we've got PAYE and PRSI. So that's from the question. That is not taxation, by the way. The only thing that's ever taxation is corporation tax. So I saw PAYE here a second out there. It's 46.1. Could be an asset, very unlikely. And we also have debenture interest due. And that is 28.4. Now, from doing this very recently, I have a feeling that wages due isn't 5,200, but we'll see at the end. Anyway, add those up, take them away. 24288, and obviously we're going to add it on, and we get 1179938. Debentures, so we've got 375. And we've got our authorised and issued ordinary shares, 600 and 250. Authorised. And issued shares are 500 and 200. There was no revaluation reserve. Normally there is actually. Your profit loss balance 419638. So hopefully we add those together. They add up to 1,4. I've gone wrong there somewhere. So 419 plus 7, that's 119638, plus 375 is 1494638. So that part is right. Where have we gone wrong here? Left out investments. Easily done as well. Not that easily done, fairly stupid. I can chalk that down as a mistake. So they're 4% investments, 315. So add them on then. And you get 1494938. And there's a difference of 1494938, 1494638, so 300. I have a feeling I've did the debenture or the I have a feeling I have the wages wrong. So I can't remember. The backdating of the wages, I just have a feeling is it should be 5.5. Anyway, we'll just leave it at that. If I find a mistake, I'll just add it in as a note at the end on Classroom. But that's the general gist of how you do them. Just be careful on the layout. I obviously made a balls of layout at the start. Anyway, hopefully that's of some use to you. Have a good look over that one there, Ryan Limited, for your exam. Alright, enjoy the rest of your break.